Reluctant Preppers provides educational awareness and commentary only. Opinions expressed do not constitute personalized financial advice. Viewers are encouraged to do their own research and seek qualified personal financial consultation before making investment decisions. Hey, Reluctant Preppers! If you haven't heard, we've already started our monthly 1-ounce U.S. Silver Eagle thank you gift to one active Patreon subscriber each month, signed by your host, Dunnigan Kaiser. And you don't want to miss out on that.
Please help us grow by subscribing today at patreon.com/reluctantpreppers.
As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Welcome back, Reluctant Preppers. We have a returning guest tonight who we haven't had on for several months. David Moadel is a researcher at PortfolioWealthGlobal.com. David, thank you for joining us here again on Reluctant Preppers.
And I'm a huge fan of your show, and it's such an honor to be here again. So thank you so much.
We wanted to have you back on to talk to us about what you see happening and major trends that will be affecting our viewers and some of the concerns that they rightly should have about the stability and security of their financial lives. Specifically, we could talk about what's going on in the stock market, the bond market, and some of the hype surrounding the G20 Summit, and some other aspects of what's happening in our affecting our U.S. dollar, and a lot of countries turning away from the use of the U.S. dollar, what that spells for our near future, and how people can help protect their retirement accounts, different things they should consider in that regards. So if we could roll back to the beginning there and have you talk to us about the stock market. We've certainly seen a year of volatility in 2018. It started out with a huge precipitous drop in the end of January going into February, and we've had some people on our channel, for example, Lynette Zhang, talking about the banks are getting out first. Where did all our money go? We've had Gregor Mannarino talking about sort of this unending support, even unnatural support that the market keeps getting. Every time things seem like they're going to heck in a handbasket, we'll see some amazing supportive feature, either domestic or foreign entities stepping in to buy the bonds, et cetera, driving yield rates down and driving the dollar down and somehow supporting the market one way or another. So could you just talk to us about what you are seeing, the major trends affecting the stocks currently, and where you see that heading next?
Absolutely. You brought up a whole host of issues there, and I'll be glad to tackle them all. G20 is on everybody's minds right now. The markets, as we are making this video, went up quite a bit today, as if this trade agreement is going to solve anything. I believe that the media, I'm talking about the mainstream media, is overhyping the trade agreement because they don't want to have a market crash right before Christmas. That's the last thing they want. But we've had a year of very terrible returns in the markets. They don't want the fear of recession to hit the markets right now, talking about the mainstream press. The deals between the two superpowers, they don't get struck that easily. It doesn't happen like that in a weekend. This is something, talking about the trade war, it's going to go on for years. Don't kid yourselves. When the real crisis does happen, and it will, it'll be the catalyst for the next recession. It's inevitable. And I believe this is going to happen before the next election cycle. In fact, it's going to be a major consideration in the next election cycle. It's going to turn things upside down. Right now, if you're in stocks, if you're in the major indices right now, don't let today's price action fool you. I don't know when this is going on, when this video is going to go out, but what we saw was euphoria in the markets today and a relief rally, but it's really just a dead cat bounce. That's all it is. If you're a saver, retiree, investor, even if you're a speculator, if you think this is how it's going to go, if you're counting on a Santa Claus rally, if you're counting on relief throughout 2019 after a flat or possibly even negative, we'll see how it turns out, 2018, you're going to have to guess again because it doesn't work like that. Trade deals do not happen this easily. It's not as simple as that, folks.
I forgot to mention in the beginning, and thanks for pointing it out, today is Monday, December 3rd, 2018, for those of you who want to tie this to the exact date of these news stories. So go ahead. The G20 Summit, a lot of the hype that's surrounding this is certainly focused on Donald Trump and his pressure, the hardball he's been playing with China, and now hoping that there'll be some relief from that. Do you sound like you're seeing that the trade wars are going to be more of a long-term contracted affair as various countries stake out their protective positions to counter and recounter each other? It sounds like you're seeing that more volatility ahead in the equities markets.
It'll be beyond volatility. It'll be a collapse. Look, you got to prepare yourself now. This trade war has been going on. It's just that the mainstream press is not talking about it. It is a de-dollarization war is what's going on. China, Japan, Russia, Turkey have been dumping U.S. dollars and U.S. treasuries and U.S. debt for a long time, and they've been ramping it up in 2018. There's no sign of this slowing down. The result of global de-dollarization is that the Fed is going to have to raise interest rates on bond yields substantially at the auctions to be able to sell the debt. Or they'll have the other choices they can monetize by printing more money. That's what they do. They're the Fed. Either way, you're going to see a 20 to 30% reduction in the purchasing power of the U.S. dollar, which could actually be a good thing, I suppose, in 2018, in 2019, because 2018, the dollar has been the world's best performing asset, believe it or not. That's a rare thing. It's not a good sign. I'm sorry, go ahead.
I was just chuckling because that's an interesting statistic, the world's best performing asset.
Yeah.
Go ahead.
Yeah, compare it to other asset classes. The stock market has gone nowhere in spite of today's price action. Cryptocurrencies, unfortunately, have not been the best performing asset class, although I do see that turning around. Bonds are, anybody who's been holding bonds for a while, if you bought bonds at any time in the past, you're suffering right now because as bond yields go up, they have an inverse relationship with what you actually get. As far the bond coupon rates go up, what you actually get paid goes down. So I see 2019 as the start of a hyperinflationary era, kind of like we've seen in Venezuela, Argentina, Zimbabwe. We're not there yet, but we're getting there. I see the Fed will stop hiking rates at some point, but inflationary pressures will persist because corporate profits are up, the tax cuts have been made, it's all been priced in. Everything points to higher inflation, which is not good for stocks, not good for bonds, good for gold, good for silver. If you don't have precious metals holdings right now, you need to wake up. And actually, at portfoliowealthglobal.com/gold playbook, we have a complete guide on how to play gold right now through the mining sector, which has been depressed in 2018. It's a great opportunity to get in. Look, many people have misread the gold market for a long time. They've been frustrated. Gold has been around $1,200 an ounce for a long time. We now have the ideal conditions for a gold bull market. We have an environment in which interest rates are not rising at the moment. We just ended a hiking cycle. And so we also have inflation, perfect environment for gold to prosper in 2019, silver as well. So again, if you're not in the metals, I don't know what you're thinking right now.
Could you circle back just for a minute and talk to us about the U.S. dollar? You touched on it in passing about de-dollarization, and then you later talked about that the U.S. dollar has been the largest growing asset in the last year, but that's going to be a turning around. So let's take that one step at a time. For those who haven't been following this, what exactly do you mean when you say de-dollarization?
Yeah, okay, let's take a look at oil, okay? China rolled out the futures for the petro yuan as a competitor to the petrodollar. Yes, the dollar is still the world's reserve currency. It's the way most nations trade oil. But the trade war has been ongoing. It's not something that started in the summer, okay? It's been going on for much longer than that. It's just not reported on. So you've got countries that would love to get rid of the dollar as the world's reserve currency or just get rid of it altogether. So you've got the petro yuan competing with the petrodollar. You've got, again, Turkey dumping the dollar, dumping U.S. treasuries, dumping U.S. debt, China, Japan, India. These are nations that own more of the United States than the United States does.
Yeah, I think Russia sold off like 80% or more of their U.S. debt holdings over the first few quarters of this year. Yep. Yeah.
And so what does that tell you? Does that tell you that we're really friends with these countries, despite the handshakes, despite the deals, if you want to call it that. No, we're not friends. No real deal has been made. Nothing has been accomplished as far as I'm concerned. Because do you really think, first of all, that everybody is going to hold to their promises? Do you think, how long is this going to last? Do you think that any of these nations are going to stop dumping U.S. debt? All right. When they own more of the United States than we do, when they call into debt, what's going to happen? What's going to happen to you, to me, to all of us in the United States and globally? What's going to happen to the economy? And what's going to happen to the dollar? King dollar is going to be dethroned. It's already happening. If you want to read more about that, you can go to portfoliowealthglobal.com. First of all, you want to go get the newsletter. That's one thing. You also want to go to portfoliowealthglobal.com/crash, C-R-A-C-H. We'll brief you on what the crash is going to look like, I believe, again, before the next election cycle. How you can prepare yourself now, because if you're just all in stocks right now, if you're in the major indices right now, you're just asking for trouble. It was bad in 2018, again, with the dollar doing better than stocks. It's going to be even worse in 2019. Mark my words on it.
We've heard, I'm trying to think if it was Rob Kirby has talked for some time about the litany of countries around the world turning away from the U.S. dollar, as you just mentioned. But there's an interesting point by goldsilver.com's Mike Maloney, who talks about that at the last stage, right before a collapse of the U.S. dollar, he expects to see actually a flight of safety into the dollar and a period of deflationary period where people are perceiving that the dollar is the last place to run to. Do you believe that the run-up you've seen in the dollar this year was in fact that last gasp before the dollar inflationary cycle begins? Or do you think that that's still an even greater example of that is yet to come before we hit that hyperinflation? Or do you not even agree with Mike Maloney's view of the sequence that we'd expect to see before we see a hyperinflationary period?
Yeah, and I'm a huge fan of Mike Maloney, Rob Kirby, everybody you mentioned. Those guys are great. But yeah, does anybody really believe, does anybody watching this, listening to this, really believe that the U.S. government, that the central banks and all over the world are going to slow down their money printing habits? If you believe that, that's fine. I don't believe it. I think they're just going to ramp up. I think that, well, first of all, what is the debt? Has anybody ever gone to look at the U.S. debt clock? I'm sure you've seen that website. I'm sure your audience has seen it. It's almost comical. Yeah, with the debt clock, it's up to $21.5 trillion. U.S. debt. Unsustainable. What's the only solution they've come up with so far is to print more fiat currency. I'm not a huge fan of fiat currencies. I'm a huge fan of hard-backed assets, which we had before 1971 to some extent, until we got off the gold standard. I'm a fan of cryptocurrencies as an alternative and as a grassroots movement. I'm not a fan of fiat currency's future. We're not Venezuela quite yet. We're not Zimbabwe and Argentina quite yet. But I do believe we're going to get there as long as those central banker habits persist, and they have no reason not to. Their jobs are secure, or so they think. Their livelihoods are secure, the fat cats and the fat bankers. Well, okay, they can believe that if they want to, at the expense of the middle class, which is shrinking. We're only going to see hyperinflation again before the next election cycle. That's my call, and I'm sticking to it.
We just had David Morgan on this same evening, and he was talking about the dynamics that happen when you do hit an inflationary period and the value of debts that you have for a short period of time anyway may become easier to pay off. Are you a subscriber to people who want to reduce their risk right now should pay off debts now, or wait until this hyperinflationary period hits and then try to pay off your debt?
If you even can pay off your debt.
That's what he says. The countervailing trick part to that question from David Morgan's standpoint is that people might assume everything else would stay the same, like they still have a job and so on.
Yeah, okay. And I love David Morgan, Mr. Silver himself. Awesome. But and we all have our own opinions on this. Look, the ability to pay off the debt, both on a macro level and on a personal level, they don't want us to pay off our debt. That's the thing. Other countries don't want us to pay off our debt because that way they can continue to control us. And our country, our monetary regime doesn't want us as people, as citizens, to pay off our debt. The wealth gap in the United States is widening for that reason. Politicians are, they're putting price controls on stuff, but all that does is make it look like they're doing something for the poor and the middle class. All this does is increase inflationary pressures. We talked about inflation, eventually leading to a recession and a market crash, like I talked to. Tax receipts are down. We're looking to foreign countries to fund our debt. They love the fact that we have debt. And they've been doing that for 40 years now. And now that they're dumping our debt, dumping our dollars, dumping their treasury holdings, the currency war is ramping up. The currency war is the trade war. It's only going to escalate. Don't fool yourselves, folks. We're headed into a decade, not just a year, but a decade with low yields on stocks, terrible returns on bonds. Again, you can go to portfoliowealthglobal.com, get the newsletter, and go to /bonds, portfoliowealthglobal /bonds. Learn all about that, what's going to happen in the bond markets. It's going to be higher inflation levels, terrible for cash, terrible for bonds, great really only for alternative assets, whether you're into commodities, whether you're into cryptocurrencies. But I like gold and silver. Those are my favorites. I've been holding those for a long time. And frankly, I don't mind gold at $1,200. I don't mind silver at $14. That's fine with me. In fact, it's an opportunity to buy more, as well as select stocks as long as you choose the right ones. But you got to be careful out there.
One thing we haven't touched on, and I want to come back to gold and silver in just a minute, but before we let this slip away, you talked about this lost decade that's coming. People who are looking at retiring, and we have the baby boomer demographics staring us in the face. The largest generation ever is now reaching retirement age. We've seen lots of talk about the federal government of the United States having to restructure Social Security payout benefits schedule, about having to restructure Medicare, having to restructure all kinds of things. Restructuring is a polite word, just like companies used to say, restructuring when they didn't want to say layoffs or firing or whatever. So people who are trying to survive on what's either current retirees or people who are approaching what they always thought was going to be their retirement age are rightfully concerned about the risks that are posed to their potential for retirement, the ability to even retire at all. Can you talk to us about what these effects that you've been describing on stocks and bonds and the U.S. dollar, how they affect retirees or potential retirees?
Yeah, if they even can retire. The American dream is not a dream anymore. It's more of a nightmare. People are waiting longer and longer to retire. Do you think they want to? Do you think their grandparents retired early? Do you think their parents retired early? This is the first generation to even consider doing that. And it's because they have to, not because they want to. Because they're not able to rely on their savings. What savings? Most people don't even have, if they ran out of money, they're living either paycheck to paycheck. They don't have a month's worth of expenses. You're supposed to have 6 months worth of expenses saved up. Most people don't even have close to that, just to cover for emergencies. Do you think Social Security is going to be solvent in 5 years, 10 years, 20 years? Pension plans are insolvent, not just at the state level, but also at the government level for government jobs, insolvent. So there's no safety net. The safety net is gone. People who had the promise of investing in bonds, because remember what a bond is. It is a debt obligation from the U.S. government if they're U.S. treasuries. Those were supposed to be safe investments. You remember back in the day when bonds used to pay a safe 5% yield? Mm-hmm. Yeah, those days are gone, all right? So no more safe yields. There's nowhere to go except the stock market. That's what most people think. That's what the mainstream media is going to tell you. And so you're risking another 2008 happening. Market crash happens about once every decade, and it's been, let me check my watch, a decade, okay? I'm not saying that bull markets die of old age, but this one's going to die harder than any of the previous ones. 2008 is going to look like, that'll be nothing compared to what's coming, because we didn't have hyperinflation that's coming. We didn't have that back then. We didn't have at least there were places to hide back then. At least you can hide in bonds. You can't hide in bonds anymore. Here's an interesting thing. I was looking at my charts today. You may not know this. The yields on, people talk about the yield curve flattening or inverting.
Yeah.
The yields on the 2-year, 5-year, 10-year, and 30-year U.S. Treasuries are all converging. Check the chart. It's crazy. Pretty soon they're going to invert, which is going to put a lot of pressure on the Federal Reserve to stop hiking rates. And if they stop hiking, that's going to be a clear signal to investors if they don't have one already. In this environment, you don't want to be in bonds. You don't want to be a sitting duck in the stock market. If you don't have some, I'm going to pound the table again, precious metals holdings right now. You need to seriously consider it because you're going to have a storm coming in 2019 and then slow growth forever, or at least for the next decade. The wealth gap is going to widen. It's going to get ugly, folks. Get yourself educated. Get some,
We've had retired family members approach us and talk about exactly what you just ran down, the litany of they can't get any interest on their certificates of deposit or their savings in interest-bearing accounts, and they don't really want to go gamble in the casino of the stock market as they see it, and they're wondering, well, where else can you turn for legitimate returns on your assets if you're in a retirement situation? And those who have looked to precious metals such as gold and silver in the past, most recently when we looked back, there was a big interest in that. If you think about when every advertisement on TV and every kiosk in the mall and everything was talking about we buy your gold or you can buy gold here, whatever, that was back in the 2010, 2011 and so on, and that was when gold and silver were running up at the last time. Since then, it's been very down and sideways for those markets in most cases, and people look there and they're not very encouraged by what they see in recent history, in the last decade, as far as returns or any kind of preservation of capital that happens in the precious metals. So what gives you more confidence now than, say, people have had for the past decade in the precious metals, for example?
I get it. Since 2011, it's been a tough go at it with gold and silver, platinum, palladium, whatever you're into. These cycles happen, all right? But I believe in buy low, sell high. I learned that from my dad a long time ago. I learned it from Warren Buffett, and I've learned it from some of the people you mentioned, such as Mike Maloney and David Morgan. These guys, they are net bullish on silver, net bullish on gold, but they don't buy just at any old time. What you can do is you can buy some, and then if it goes down like it has in 2018, buy some more. You can accumulate. You don't have to just buy it all at once. The gold-silver ratio, I'm sure many other people have mentioned this on your program. Mm-hmm. The gold-silver ratio right now is standing above 85. It's near 86 right now. That has only happened 4 times. That level has only happened 4 times since we got off the gold standard in the United States in 1971. Whenever that happens, what you get is not only silver outperforming, but precious metals outperforming, because things are out of whack. In the COMEX markets, yes, you do get silver price suppression whenever it gets too high, but it's not too high right now. You can worry about that when silver gets to, let's say, $30, $40, $50 an ounce, something like that, which is coming. Until then, you can be assured that the silver price suppression will be moderated because they already suppressed it. It's already a depressed price. Silver has real value. It's backed by something, unlike fiat money. There's no need for a promise from the government. And by the way, this is not I'm not putting down cryptocurrencies because they're backed by something else. They're backed by a grassroots movement. And I actually learned a new word today when I got to speak with Tone Bays, the cryptocurrency Bitcoin expert. He taught me a word that is unconfiscatable. Unconfiscatable. Which is not in the dictionary yet, but he's trying to put it in there. Mm-hmm. Cryptocurrencies, Bitcoin is unconfiscatable, cannot be confiscated by the government. They'll try to find ways, of course, or they'll try to compete with it, with a Fed coin, something like that. Gold is mostly unconfiscatable. I know in 1933, They forced people to sell their gold to the government, large holders of gold. All right, people blow that out of proportion. Most people, most small holders like you and I, got to hold on to their gold. Okay, we're talking about huge holdings back then. So you got to have assets other than fiat, other than the major stock market indices. You got to diversify or die. Those are your choices.
Again, when we were just speaking with David Morgan, we specifically asked him that question about precious metals confiscation. He reminded us that the government has no legal basis for confiscating money directly from individuals, so that if you were to hold U.S. mint created, whether it was what they call junk silver or constitutional silver coins pre-1964 and earlier dimes, quarters, and half dollars, or U.S. silver eagles, for example, or golden eagles, all of which have their face value called out in U.S. dollars, that should count as money and not as just as any other asset that could potentially be subject to confiscation. So, for what people, there's lots of people will talk about with the IRS around. They're used to confiscating all kinds of money from people, but that's a different story. What about that, though? In the case of hyperinflationary gains on precious metals, do you see windfall taxes and other maneuvers being used by governments to swoop in and take the lion's share of people's benefits that they got from trying to protect their assets in precious metals?
Yeah, of course. Would you put it past them? I wouldn't. The dirty tricks, the dirty tactics. I don't put the U.S. government above a Wells Fargo and their malfeasance. I don't put them above common criminal, really, because they're pretty common and they're criminals as far as I'm concerned. So what you need, again, assets that are unconfiscatable. It's as simple as that. I believe Bitcoin falls into that category. I believe gold and silver, if you store it properly and don't brag about your holdings to everybody, I believe that that's a pretty safe investment to have. The government has no right to take your holdings. Do they have a right to take your cash? Well, they devalued it to nothingness, so they pretty much took it already. They took its value away. So yeah, they're taking your cash already. You may not even know it. In 2017 alone, the value of the dollar against other world reserve currencies went down 10%. So they're already taking your cash. I'm not saying don't have some dry powder, okay? If and when the next recession does happen, do you want to be able to buy some gold and silver and cryptos with your fiat currency? Sure, why not? What's the point of holding on to your dollars, which are, again, king dollar, won't be king dollar for much longer. But I'm not saying that you have to just burn your cash, but there are opportunities out there. A bear market is coming, and you want to have some cash ready just to be able to get things on sale. We have a report on that, portfoliowealthglobal.com/bear, BEAR. It's a very comprehensive bear market manual that can tell you how and when to purchase these non-confiscatable types of assets. I love using that word. It's so cool. Thank you, Tone Wade, for coming up with that one. But I believe in having assets that cannot and will not be taken away from you.
Your comment about the fiat devaluation of the dollar already stealing much of people's wealth away from them. It's doubly true because, as Lynette Zhang points out to us, when the government devalues the currency, every other asset that you hold, including many other things that you might own, are like your house or whatever, appear to have increased in value in nominal terms, and therefore they fall subject to additional taxation due to capital gains and so on, which you might not have had any gain at all, but because they appeared to increase in value just because the measuring stick got smaller, then now they can take some of that from you as well. Yep.
And Lynette Zhang, she's fantastic also. I'm a big fan of hers. She's like the high school teacher I wish I had,
That's right.
And I wish they had taught me these things.
Yeah, life lessons you were never taught in school.
Because there is no financial education.
That's right.
Life lessons I was never taught in school, and financial education. I'm a former high school teacher. I taught elementary school, 5th grade. and in what seems like a former life. I taught at the college level. And in none of those grade levels was there any financial education. I snuck it in under the radar. But if the principal had walked in while I was teaching about finances instead of about, I don't know, some obscure math theory, I would have actually gotten in trouble for doing that. What a shame, isn't it, that in America, there is no financial education at the K through 12 level or usually at the college level, unless you're a finance major. On the other hand, we're taught things that are pretty useless. When I was teaching, weird, trigonometry, algebra type concepts, sometimes students, young students, 10, 11 years old, when I was teaching fifth grade, would raise their hand and say, why am I learning this?
Yep.
And my answer was, I didn't have a good answer. I said, because it's going to be you're going to be tested on it someday.
Right.
What a shame. What a shame that American education has come to this. And that's why we have the newsletter at Portfolio Wealth Global, because we're providing that education. We're democratizing finance, personal finance, so that Americans can fend for themselves when you have a government and central banks and banks like Wells Fargo and the other banks too. I don't want to just pick on them, that sure. Not only don't care, they actually, I think they actively are malicious. And I know that's a scathing indictment, but I believe it's true. So there you go.
Well, that's why we're here too. We're here too to try to provide at no charge that kind of education, the things you're not going to hear about on the mainstream news, the things you were not taught about in public school, and the things that you do need to know in order to be aware and prepared. We thank you, David Moadel, for being here with us and for giving our viewers many tips along the way, as well as links that they can go and get free reports. So if you could perhaps email me those actual links that you mentioned, it'll help people. I'll just put them in the description after the video, and people can go after that stuff and get that information as well.
Fantastic. I appreciate coming back. If people want to get all the reports on one page, portfoliowealthglobal.com/money. That's /money. Get them all on one page. Download them all, and check out the newsletter as well. And the channel you're watching and listening to right now, subscribe if you haven't done already. Reluctant Preppers it's not an alternative source. It should be your main source. So stay with it.
Thanks, David, for joining us again. And thanks, everyone, for being here for us here on Reluctant Preppers. If you haven't had a chance, try to check out patreon.com/reluctantpreppers. It's another way that you can support us here. David, thanks for joining us.
Thank you, sir.